Good day, everyone. I am Dea Paula N. Paurum, and today I will be discussing about financial budget. While the operating budgets reflect the operating activities of the company, financial budget reflects the financing and investing activities. So this is illustrated through cash budget and capital expenditures budget. So what is cash budget? So this estimates the expected receipts or the inflows and payments or the outflows of cash for a period of time. In addition, the capital expenditures budget, dividends and equity or long-term debt financing plans of the company affect the cash budget. So note that the cash budget presents the expected receipts and payments of cash for a period of time. The primary source of estimated cash receipts is from cash sales and collections on account. Cash receipts may be obtained from plans to issue equity or debt financing, as well as other sources such as interest revenue. So, to estimate cash receipts from cash sales and collections on account, a schedule of collection from sales is prepared. The budgeted cash collected for any month is the sum of the cash collected from previous month sales and the cash collected from current month sales. This is shown here, table number 1. So to illustrate further, here in table number 2, the cash collected in February is 40% of the cash collected on sales in January, which is this one, times 40% added to 60% of cash collected in sales February shown here. Using this table, this is the schedule of collections from sales for Elite accessories for all 3 months. To simplify, it is assumed that all accounts receivable are collected and there are no cash sales. Estimated cash payments must be budgeted for operating costs and expenses such as manufacturing costs, selling expenses, and administrative expenses. In addition, estimated cash payments may be planned for capital expenditures, dividends, interest payments, or long-term debt payments. To estimate cash payments for manufacturing costs, a schedule of payments for manufacturing costs is prepared. To illustrate, the following data for Elite Accessories Incorporation are used. So the budgeted cash for any month are the sum of the cash paid from previous month's manufacturing costs, less depreciation, and the cash paid from current month's manufacturing costs, less depreciation. So to illustrate further, the cash paid in February is 25% of manufacturing costs in January, added to 75% of cash paid on manufacturing costs in February, which is computed below. So first, when we compute January, $840,000 minus $24,000, total of $816,000. So the 25% of 816 is 204,000. While in February, the total is $756,000 and its 75% is $567,000. So when we add these two payments of prior month's manufacturing costs with its less depreciation, it totaled to $771,000. In this table, it shows that the schedule of payments for manufacturing costs for Elite accessories for all 3 months, January, February, and March. Completing the cash budget. The cash budget is structured for a budget period as follows. So the budgeted balance at the end of the period is determined by adding the net increase for the period to the beginning cash balance. The ending balance is compared to a minimum cash balance to support operations as determined by management. So here, as you can see, estimated cash receipts minus the estimated cash payments. And the total might be increase or decrease added to cash balance at the beginning of the month. So the total of this becomes the beginning balance for the next period. Then, when you minus this one with the minimum cash balance, this might be an excess or a deficiency. So any difference between the ending balance and the minimum cash balance represents an excess or deficiency that may require management action. So in this table, this shows the other receipts and payments like cash balance, the quarterly taxes paid, the interest expense paid, interest revenue received, sewing equipment purchased in February 2016, and the selling and administrative expenses. In this cash budget table of Elite Accessories, in January, they will be expecting an excess amount, which is $28,500, in which they might be investing it in temporary income producing securities such as US Treasury bills or notes. On the other hand, in February, they will be expecting a deficiency of $5,500, and then it might require them to borrow cash from its bank. Next topic would be capital expenditures budget. So this summarizes plans for acquiring fixed assets. In addition, purchasing additional fixed assets may be necessary to meet increasing demand for the company's product. As shown in this table, again, Elite Accessories, capital expenditures budget are often prepared for 5 to 10 years into the future. This is necessary because fixed assets often must be ordered years in advance. Likewise, it could take years to construct new buildings or other production facilities. As you can see here, 2016, 2017, 2018, 2019, 2020. So, an example of this siguro is sa mga companies nga magsige og make og mga new buildings or like they will be upgrading machines like sa hospitals. They will be presenting this capital expenditure budget. The capital expenditures budget should be integrated with the operating and financing budgets. So an example is depreciation of new manufacturing equipment. This affects the factory overhead cost budget. So the plans for financing the capital expenditures will also affect the cash budget. The budgeted balance sheet is prepared based on the operating and financial budgets of the master budget. So, what is master budget? Master budget is a comprehensive financial planning document that includes all of the lower level budgets, cash flow forecasts, budgeted financial statements, and financial plans of an organization or company. So, the budgeted balance sheet is dated as of the end of the budget period and is similar to a normal balance sheet except that estimated amounts are used. So, budgeted balance sheet and balance sheet are not the same. So that's all for my report. Thank you, everyone.